Good Tuesday afternoon. It's 12 o'clock noon, December 8th. My name is Les Solgrove. This is Via Realtors Des Moines Real Estate Market Update. And hey, welcome to the show. We're in week 49 of 53 weeks. So if you're thinking 53, you need to watch last week's show to figure out where that came from. So yeah, we have 53 weeks. So anyway, welcome to the show. This week, we're going to talk a little bit about what came first, the chicken or the egg, or at least that concept in real estate. Also, we're going to talk a little bit about what's going on with showing activity and what's going on in the real estate market here. And I'm also going to end the show today a little bit with a little recap of predictions by the National Association of Realtors. Lawrence Yoon, he's going to have a couple of predictions that I'm going to share with you guys today. So with that, let's get started. And so the age-old question is, what comes first, the chicken or the egg? Well, in real estate, it's really more along the lines of what came first, the buyers or the sellers. And, obviously, if we have an even number of buyers to an even number of sellers, we kind of end up in a balanced market. And 2020, if anything has proved anything in 2020, it's that we're not in a normal market. This year has been the year that we've had more buyers. At least it appears to be more buyers, but predominantly fewer listings. And, the question is, are we seeing more buyers because we have fewer listings, or do we have fewer listings because we have more buyers? And I think it's the other way around. I think we just happen to have, it just appears that we have way more buyers out there. There is some truth that the industry is picking up our market is picking up about 2,000 sales additional this year that I've predicted, and we're right on track for that. But to kind of look at the buyer activity this year, this is the showing time report that is produced and made available by the Des Moines Area Association of Realtors, and this is a graphic representation of percentage of change in activity, showing activity. In other words, scheduled showings by realtors of properties that are listed compared to last year. And if we start out here the first of the year, we started out pretty even in January. We were almost lockstep with where we were last year. And then as January started to progress, we started to see in the gold line, this is 2020, we started to see quite a bit of activity above last year. So the buyers woke up early in 2020. And this was all kind of before COVID really hit. It's pretty evident here, and this graphic kind of overlaps a little bit of that. But this is right about where COVID really kind of hit our marketplace. And you can see that instantly there for about 30 days, we had slower activity than a year ago by about 50% here. And what's interesting, though, is that this year progressed, and we ended up in May all the way through around August. We had more activity this year, more showing activity than we had from the previous year. Now, once we got to August, we kind of started to see a little bit of coming back to where we were in 2019. So you can kind of see here for about 30 days, we were fairly close. There was a couple of weeks where we had less activity than we had a couple of weeks of more activity. But once we got into mid-September, we also started to see a little pickup again. And it really picked up until about, that middle of October, at which point then we've kind of finally settled back into kind of what we were last year with our market. And so showing activity from about that second week of October on has been very, very similar to last year. So, if you're a seller out there, you probably, your realtor's probably saying, this is pretty common for this time of year. If you're a buyer out there, you've probably got some pretty good, possibilities of seeing some homes out there because activity is a little bit lower, even though our inventory is lower. One thing you'll notice here is this huge dip that happens to be Thanksgiving weekend. So showings definitely drop off for about a week there between Thanksgiving, first week of Thanksgiving, and then we're back up again. This dip kind of plays along if we look at where we're adding listings to the marketplace. So we add listings here week 47 and then week 48, which was Thanksgiving week. kind of tailed off, and then week 49 again, we've picked right back up. So if you take that out, we're kind of in this normal pattern. This is single family resale in the blue. The gray is new construction single family. And, so we kind of see that kind of increase a little bit. And then our condo townhome inventory also kind of increased. The only area that kind of stayed flat or downward just a little bit was the condo townhome resale market, which is probably our slowest moving. I mean, it's still very popular, but it just doesn't move as much. So another indication of that same dip, that holiday dip there's Thanksgiving week. We had fewer open houses that week, but we turned right around again, and we had 215 homes, which are resale properties, existing homes, and 369 new construction homes, which pushed us back up to 584 total homes held open this past weekend. And that's pretty much right on track with where we've been, the bulk of summertime on here, week 27 on. We've been around that upper fives to low 600 counts. So again, looking at, where's the challenge this year? And we all know what the challenge is. No inventory, no homes for sale. And it's very evident when we look back, going back 10 years. So back to 2009, all the way to 2020, here's that peak that we were kind of seeing the very beginning of the year with inventory coming up, and then COVID hit, and home sellers just pretty much stopped listing. And the fact that we had more buyers out there, a few more buyers, has really just kind of kept our inventory down. And so you can see we're in deep record low territory. In fact, let's take a look a little bit closer here. It's just 2020 year to date, that same amount of new listings. So there's our, COVID hit right about here. We kind of leveled and then picked back up as everybody started to go, okay, we're going to sell our houses during COVID. And then the inventory just continued to drop. We ended last Sunday at 2,421, which, if we look at the next graphic compared to the previous year, you can see that we've gone the last 2 weeks with new record lows. We were at 2,469 2 weeks ago, 2,413 last week. And, 2,421 kind of, it's just a little bit more than the previous week's record there. But you can see where we've kind of come right along here from. This is where COVID hit. We actually had more inventory that first part of the year until about late April, early April, early May. So we're still, 2,400 homes, 1,400 homes. 1,400 homes short of our homes for sale inventory. And here's a little bit of preview of what's going to happen next week. Yesterday, December 7th, we actually dipped below 2,400. So remember, 2,421 as of last Sunday. We're now, as of yesterday, down to 2,382, which is the very first time, again, we've broke below one of those benchmarks of the 2,400 mark there. So how much farther do we have to go? Frankly, I believe we have some more room to go. I think we're going to still see more dropping here at the end of the year, till the end of the year. So, all right. So I decided this week to kind of pull some national stats to compare to our local market statistics. And this is months of supply of existing home inventory. So existing home is what I call resale in our marketplace. So existing home and resale are basically the same thing. And you can see that nationally, the months of supply for existing home sales or resale homes nationally as of the end of September was 2.5 months. And keep in mind, these numbers they lag behind just a little bit. So 2.5 months. So let's overlay that with where we are so far this year. Now that 2.5 months, obviously it's end of September is right about here because the national numbers don't come out until about 60 days later. But you can see, though, still, if we are still at 2.5, let's just say we were at 2.5 months of inventory nationally, which means that, if no new homes come on the market, it would take about 2.5 months for us to sell out of all the homes we have currently for sale nationally. Of course, we always add more homes when homes come on the market. We're always refilling that bucket as we're selling out of them. But you can see that we're at 1.4 months for our single family resale properties. So we're almost a full month faster pace nationally here in our marketplace than we are across the United States. And that's a pretty good testament to the health of the Iowa real estate market, in particular the Des Moines Central Iowa market. Let's see how that looks compared to new construction. So again, at the end of September, we were nationally there were 3.8 months of home inventory, and this number nationally dropped off considerably from early years. So this is just January through September here. That's kind of the traditional buying time for new construction is spring to summer. And not only that, just the lack of inventory nationally has caused the home inventory levels of new construction to drop quite a bit. So let's look at how that looks compared to labeled over our inventory here. Now, again, this is really back to September, but let's just say that 3.8 months, and what I'm hearing is nationally that number hasn't risen much. You can see that back in September, end of September, we were actually closer to that 3.8 months of inventory, but our builders here locally have started adding more homes to the market, which nationally we don't have that luxury. I keep hearing national speakers say we need more homes on the market nationally and new homes. And here locally, we've done a very good job, or our builders have done a very good job, and developers have done a very good job of bringing that inventory back into the mix. And you can see that we're currently 4.6 months of inventory. And if you were to bring that September number all the way across, we'd be at 3.8. So we are ahead. I'm positive and confident that we are ahead of nationally for new construction. So just to focus one more thing on the single family resale, this is a graphic that I put together that gives us an idea of how short we are of inventory. Now the new construction, we're pretty even. We've got just the right amount. So it would really kind of come up here around this zero or just slightly above zero balance, meaning we don't need much more inventory for the demand. But currently with the demand that we have in the single family resale homes, we're currently at 1,967 homes short. So this tells us that the buyer activity out there could really easily, well, I'll say easily, it could use about 2,000 more homes on the marketplace right now to make the home buyers feel more comfortable, and sellers would still not be probably hurt with having too many homes for sale. It would put us in a balanced market. And what's really kind of interesting on this, and I'm just going to draw a line across here, 1967, this 1979 across here on the left, this is where we were when COVID-19 hit. So we've kind of finally this week, finally came back to COVID, pre-COVID levels of home inventory. So if you think of it like this, the inventory before this dot or this line right here is really not affected by COVID-19, but then we get beyond that, and you can see that we had our dip where we were kind of slow for about 30 days when everybody wasn't sure what was going to happen, and then sellers decided, hey, let's get our houses on the market. We built the inventory, and then the inventory started to get sold, and that's why we've seen this huge drop. I would have expected this on a normal year to kind of come down, around that 3,000, and then back up, and we would be up above or closer, maybe 1,000 short at the end of this year. We've been short all for the last several years, so to think that we would ever get back up to zero in 1 year in a shortage would be probably not a realistic thing to expect, but to get closer than 2,000 should be attainable here. So anyway, the point is we are kind of on the return track here of having closer to a balanced level of inventory. Our closed sale counts here, again, we're continuing to exceed the records from the high records of 2017, which was 14.6. Last year was 14.1 on December 31st. As of just last Sunday, we were sitting at 15,246, and I think yesterday I counted, we're right around 15,350. So we've picked up another 100 closed sales, and we've got about 3 weeks left in the year. before we actually hit our year-end December 31st numbers. And I really believe we're going to be right on track for that. In fact, there's that 15,246, 13,323 a year ago, which puts us just at 2,000 homes closed ahead of last year. Year to date. That's just year to date. So that's given me a lot of confidence that if we close 14,000 sales in 2019 and we're 2,000 ahead, then logically we're going to be about 2,000 ahead. And, a few weeks ago, I drew this little prediction here. This is the gold line, the dotted line is kind of what the trajectory we need to hit in order to hit that 16,000 sales. And you can see that now that we've started to add the sales over the last few weeks, we're still growing and we're still exceeding that. So again, look for 2020 to be a 16,000 closed transaction year, which will be just terrific. A couple other noted graphics here. This is our weekly price increases. I keep expecting new construction here to have another week of price increasing, and as we get closer to the end of the year now, and maybe I'm thinking, I really thought we would have seen this around December 1st, which would have been kind of this past week. We didn't see it. We didn't see it the week before. So I think really what we're seeing is maybe builders are kind of holding off on their price increasing, trying to get all the homes they can under contract before the end of the year, before they bring in their 2021 pricing. So where I predicted this would be higher, I'm going to take that a step back now and say it wouldn't surprise me in the next 2 or 3 weeks if we don't see that large increase in pricing in new construction until we get to 2021. Price reductions, on the other hand, we're pretty much right on track for that. You can see the red line is where we were in 2019. All year long, for the most part since COVID, we have actually had fewer price reductions, and honestly, that makes a lot of sense because if homes are selling at such a fast pace, sellers are confident that they're going to probably get what they're asking, and they are probably getting what they're asking this year closer. So we are seeing fewer price reductions compared to 2019 here. The real estate dashboard, again, these graphics are all on Simply Des Moines Stats on Facebook, but the real estate dashboard kind of shows you where we are here with our inverted market. We're still separated with total sales, so we still have more pendings than we have active homes for sale. Our open houses are about 63% new construction versus 37% resales. Down here in the lower right-hand corner, we did see a kind of a spike this last week again, which was kind of end of November closed sales. We closed, our week high was 242. It's kind of hard to see on here, but if you go to Simply Des Moines Stats on Facebook, you'll see these graphics and many, many more here. So I'm going to end the show today with a forecast that I was listening to Dr. Lawrence Yoon from the National Association of Realtors this morning. He was on a program this morning by Brian Buffini. Brian is a national real estate trainer, and he was making his annual predictions. And of course, anytime I can kind of listen to Dr. Yoon, he's my guy. His predictions for 2021 are basically that he expects home sales across the board to rise. This is the number of home sales to rise by between 5 and 10%. And that's pretty much right in line with kind of where we're seeing here in the Des Moines market this year. So 2021, if he's expecting that kind of increase, I would say that we would probably see something similar as long as we have the home inventory for that. We talk occasionally about mortgage interest rates, and I have a mortgage lender on next week with me that maybe we can talk a little bit about what to expect in 2021 with mortgage rates. But he expects the job recovery to continue and those mortgage interest rates to remain low into 2021. And that's true from what everything else I'm seeing out there is we're going to see low record mortgage interest rates. So that won't be a barrier in home purchasing. And we are going to see kind of a demand rising from this remote working flexibility as employers in 2021 start to reevaluate where does it make sense for us to have offices, or does it make sense for a worker to work from home a couple of days a week and then drive into the office maybe 1 or 2 days? That's going to put some demands on local homes. Size-wise, it's going to give buyers and owners the feeling that maybe they should be buying a larger home. Instead of downsizing, we might begin to see upsizing as we move into 2021. So, if you've got that house that's got that potential office space, that could be a huge selling factor for you. And then the last thing he predicts is that prices will rise between 3 and 5% in 2021. That's a pretty normal rate of price appreciation. And that's kind of where we see the Des Moines market this year, is around that 4 to 5%. So, if we see a 4 or 5% increase in 2020, and then we turn around and see another 3 to 5% in 2021, it's just testament that owning a home is probably one of the best things you can do, best investments you can do out there, is just to be a homeowner. So, next week, I have a special guest with me. David Bell is going to join me. David is a mortgage lender with Gershman Mortgage. And last time David was on the show with me was May 4th, which is kind of appropriate. May 4th was, David is, if you don't know David, he's a big Star Wars fan. So, he was on May the 4th be with you. He was on with me on May 4th. I've got to come up with something catchy about December 15th, May the 15th. But I don't know. We'll figure something out here. Maybe he'll wear a helmet or something, Anyway, join me next week. That's week 50. And again, we've got 3 weeks, 50, 51, and 52, and 53. We have 50, actually, 4 weeks technically left in the year because we are on a leap week year. So you can always find me on and follow me on YouTube. Please subscribe. You'll be notified of each show that comes on. And again, I appreciate you joining me every week. And with that said, we will see you next week, and be safe out there, and we'll talk to you all soon. Thanks.